Imagine waking up 1 year from now, opening your portfolio and realizing the stock you almost ignored quietly changed everything for you. Not because it was hyped on social media, not because everyone was talking about it on CNBC, but because you understood something most people missed. Right now, while the market is noisy, emotional and distracted, one group of stocks is setting up what could easily be remembered as the steal of the century. And if you stay with me for the next few minutes, you'll understand why smart money is positioning early, why fear is creating opportunity, and how this moment could separate impatient traders from long-term winners. Here's the truth most people don't want to hear. Life-changing returns are never obvious in the moment. They feel uncomfortable, they feel boring. Sometimes they even feel scary. When a stock is truly cheap relative to its future, it doesn't come with fireworks. It comes with doubt, and that's exactly where we are right now. With the backbone of the modern digital world. I'm not talking about some penny stock or speculative gamble. I'm talking about the companies quietly powering AI, cloud computing data centers, and the future of everything from smartphones to self-driving cars. Let's start with Broadcom. AVGO isn't flashy, it doesn't trend on social media. But this company sits at the heart of global infrastructure. Every time data moves across the internet, every time AI models train, every time cloud providers expand, Broadcom's technology is involved. The genius of Broadcom is not just its chips, but its strategy. It dominates niche markets where switching costs are massive. Customers don't just walk away from Broadcom. They're locked in, add to that its aggressive expansion into software and enterprise infrastructure. And you have a company that prints cash, while competitors fight margin wars. When fear hits the market, stocks like this get temporarily discounted. Long term, that discount doesn't last. Now think about Google Alphabet. Some people say Google is too big to grow. That's usually what people say right before they're proven wrong. Google isn't just a search engine. It's the world's largest data company. Data is the oil of the AI age, and Google has oceans of it. YouTube alone is a global media empire. Google Cloud is finally firing on all cylinders. And then there's AI, while headlines chase every new startup. Google has been building AI for over a decade. It's embedded into search ads, maps, productivity tools, and cloud services. When AI becomes invisible, when it's everywhere and no longer exciting, Google is one of the companies that benefits the most. That's not speculation, that's structure. Meta is another stock. People love to underestimate Facebook, Instagram, WhatsApp. These aren't just apps, they are attention monopolies. And attention is the most valuable currency in the digital economy. Meta went through its punishment phase. The stock collapsed, sentiment turned toxic, and everyone declared it dead money. That's usually when the best opportunities are born. Meta cut costs, refocused and doubled down on AI-driven advertising. The result, exploding cash flow, massive buybacks, and a business that still owns some of the most powerful platforms on Earth. When people say Meta is risky, what they often mean is they emotionally remember the crash, not the recovery. The market rewards those who can separate emotion from reality. Advanced Micro Devices is a perfect example of patience paying off. AMD spent years in the shadow of giants, quietly rebuilding its technology, its leadership, and its execution. Today, AMD is a serious competitor in CPU and data center chips. And it's positioning itself aggressively in AI. No, it doesn't have Nvidia's dominance yet. But markets don't pay for perfection. They pay for progress. AMD's ability to take share, innovate quickly, and partner strategically gives it optionality. In a world where AI demand keeps expanding, there is room for more than one winner. And historically, the second best competitor often delivers outsized returns. when expectations are low. Then there's Nvidia, the stock everyone loves. Everyone fears and everyone talks about. Some say it's too expensive. Some say the run is over, but step back and think clearly. Nvidia isn't just a chip company. It's an ecosystem, it's software, platform, and deep integration into AI. Development make it incredibly hard to replace. Data centers are being redesigned around Nvidia's architecture. Governments, enterprises, and startups are all racing to secure supply. Yes, the stock has run, but transformative technologies don't follow neat timelines. They overshoot, consolidate, and then expand again. Nvidia isn't the steal because it's cheap on the surface. It's the steal because many still underestimate how long this demand cycle can last. VMware is a different kind of story. It's not about growth hype. It's about infrastructure control. VMware software sits inside enterprise systems across the globe. It's sticky, mission critical, and deeply embedded. When companies modernize their IT, VMware is often the bridge between old systems and the cloud. Ownership changes and restructuring have created uncertainty. And uncertainty creates mispricing for long-term investors. These moments can offer asymmetric opportunity when the underlying technology remains essential. Now let's talk about something even bigger. Anthropic and the AI startup ecosystem. While these companies aren't publicly traded yet, they matter because they shape where capital, talent, and partnerships flow. When giants like Google, Amazon, and others invest in AI startups, they're not gambling, they're building moats. They're securing influence over the future. This is how the next generation of platforms is formed. Understanding this ecosystem helps you see which public companies are positioned closest to the center of AI gravity. Here's the pattern connecting all of this. These companies sit at the intersection of data, compute software, and infrastructure. They aren't trends, they're foundations. And foundations don't disappear because of one bad quarter or one scary headline. The market's biggest mistake is treating short-term noise as long-term signal. When rates move, when sentiment shifts, when headlines scream panic, quality gets sold alongside garbage. That's where opportunity lives. Most people lose money not because they pick bad stocks, but because they abandon good ones at the worst possible time. They buy when confidence is high and sell when doubt creeps in. The market transfers wealth from the impatient to the patient. Always has, always will. The steal of the century isn't about finding some secret ticker. It's about recognizing world-class businesses during moments of temporary mispricing and having the discipline to hold while others hesitate. Think about this 10 years from now. AI will be as normal as electricity. Cloud computing will be assumed. Data centers will be invisible. And these companies will still be there, quietly collecting revenue from the digital world, running on their technology. The question isn't whether innovation will continue. The question is, who will own the infrastructure behind it? And right now, the market is offering you pieces of that infrastructure at prices driven more by emotion than logic. If you're watching this video, you already know the game isn't about getting rich overnight. It's about positioning yourself where growth is inevitable. It's about owning businesses that don't need perfect conditions to win. And it's about having the courage to act when opportunity doesn't look obvious. So here's my challenge to you. Don't just watch this and move on. Go deeper, study these companies. Understand their cash flows, their motives, and their role in the future economy. Decide what kind of investor you want to be, the one who reacts or the one who anticipates. If this perspective helped you see the market differently, make sure you like this video, subscribe to the channel, and turn on notifications so you don't miss what's coming next. Drop a comment with the stock you believe is the real steal, because the conversation matters. This is the moment most people will look back on and say, I should have paid attention. You don't have to be one of them.